Welcome back, everybody, to a special Thursday edition of our weekly Educated Homebuyer Market Mortgage Market Recap Update. Go through everything that happened in economic releases this week, how it impacted interest rates for any of you real estate professionals, or more importantly, our educated homebuyers who are in the market and may be out looking at homes this weekend. We're coming on Thursday today because tomorrow, Friday, is the 4th of July. So most likely you're probably not going to be out looking at homes this weekend, but if you are, you got something under contract, you want to see where the market's at, we're going to do a quick run through all the data that came out this week. It was a big week, jobs week. Didn't have a huge impact on what happened with interest rates, but we had a sort of a shockingly strong jobs report. Shockingly, if you weren't paying attention to these jobs reports over the last couple of years, as the Bureau of Labor Statistics has been very, very high and then comes back and revises after them. But we're going to go through that data. Let's jump in. You may be asking, where is my partner, Jeb Smith, my co-host here on the Educated Homebuyer? Because tomorrow is 4th of July, he is manning the fireworks stand for his son Nash's football team while they're doing some fundraising. So if you're in Huntington Beach, I wish I knew which one to send you guys to, but you can go out and see Mr. Jeb and support Nash's football team. But let's look at it starting with Tuesday this week. We got the jobs data kicked off with the job openings and labor turnover survey. That was stronger than expected, about 300,000 more job openings. That can be an issue, as when we have more jobs than applicants, that puts wage pressure. But as we're going to see here in some of this additional data that came out through the week, we're not really seeing the wage pressures, but it can be an early look at it. Markets didn't love this. What we're seeing here, more importantly, if we dig into that data, the hire rate is basically flat at a much lower level than where it was over the last few years. The quits rate also, it's ticking up a little bit, but also pretty level at a lower rate than where it was over the last several years. And the layoff rate is leveling off, decreasing a little bit, but at a slightly higher level than what we've seen. So all of that tells us that the jobs market is weaker, but not weak. So from that perspective, markets didn't love it. Well, now we get a curveball on Wednesday, the ADP jobs report. ADP, the giant payroll processor, pulls this directly from their payrolls, and what they were showing was actual job losses. We lost 33,000 jobs. I think they were projecting about 40 to 50,000 jobs added last month. So well below expectations. The market didn't react much off of this because that was yesterday, Wednesday, and we knew the non-farm payroll data was coming today. Partly what we're going to see here, I actually wanted to put this after the data on today's jobs. This is the break-even level. So what does the break-even level mean? This is how many jobs the economy needs to create to stop or prevent the unemployment rate from increasing. So as recently as a little over a year ago, we needed 165,000 jobs a month. The most recent calculations, if these are to be believed, are somewhere just shy of 90,000 jobs. That's what needs to be created on the jobs report every month for us to get there. And let's look, because I believe I did not have the numbers updated. So yeah, so here, let's take a look at this. I missed the slide for the non-farm payroll because we had one in for the live show on Jeb's channel last night, and I pulled that out and didn't update it. But we had 147,000 jobs. The forecast was for 110, and there were whispers or thoughts that with that negative data on ADP, that we would see much less than 110,000. But anyway, you cut it. The expectations were above replacement level. And we actually exceeded that by a good bit at 147,000. Unemployment rate ticked down to 4.1%. So this, in the big picture, is bad news for interest rates. Why is that bad news? Is the couple of the things that the Fed is looking at in terms of considering rate cuts, and that the market is looking at to make sure that the Fed is comfortable with their dual mandate. One of those is full employment. So when we get to 4.2, 4.3, 4.5% unemployment, then the Fed can start taking their foot off the brake and not necessarily adding stimulus, but hopefully helping the economy hold at this level. It's not looking like that's going to be an issue right now. So because of that, we are pretty certain at this point that the Fed is out of play for July. Their next meeting, there's no meeting in August. So September would be our first look at a cut. Not that the mortgage rate markets wait for the Fed to cut, but that's the expectation right now. We are going to have a very, very quiet week on these Friday updates. One of the things that we like to do is give you guys an update on what is coming next week. Well, every month we have two pretty busy weeks in terms of inflation data when we get PCE and when we get CPI. And then obviously the jobs week, a really busy one. So after this busy jobs week, not a whole lot of data coming next week as we don't get CPI till the 15th. So Tuesday of the following week. So in looking at this, wanted to throw this up here. Truflation, it's a real-time look at CPI, highly correlated to CPI, and they are seeing current inflation at 2.03, and you see that downtick to the right of the screen there. If you look at that, tells us we're down 2.18 a week ago, so down to 2.03, 2.07 yesterday, down to 2.03. So we're not really seeing any pressures, and that is where the Fed wants to see inflation at 2%. So what does it mean for interest rates? Well, let's look at this chart of the 10-year Treasury. The 10-year Treasury does not dictate mortgage rates, but mortgage rates never deviate too far from the daily direction of 10-year Treasuries. So the big arrow that you're going to see there is today. The market did not love, the mortgage interest rate market did not love, the Treasury market did not love that strong jobs report. In the grand scheme of things, this is a fairly muted reaction. We're up about 7-8 basis points from yesterday, so less than 0.1% in rates increase. But it's one of the bigger candles we've had over the last few weeks. I put the yellow dotted line in there for you to see. That's where we ended last week. So we're up about 7 or 8 basis points from yesterday, about 7-8 basis points week over week. So grand scheme of things, what does it mean in interest rates? Mortgage News Daily is reporting 6.75% for well-qualified conventional borrowers. That's up a little bit over yesterday, up a little bit over last week, and still down almost 0.25% from a month ago. If you're looking at FHA and VA loans, you're closer to 6.25. And again, the higher your credit score, the more competitive the lender that you're working with, the lower that is going to be. So if you are in the market, you're considering buying, you're out shopping, you're going to be after the 4th of July holiday. If you're going to be out looking, we would love to help you. We can help in, I don't actually have the number ahead of me because if you look this, I need to get our map updated because our team has added licensing for Wisconsin, Iowa, Alabama. I think there's a couple of additional states here. But if you need mortgage assistance, if you have questions, you want guidance on how to buy right and borrow smart, reach out at the link below, theeducatedhomebuyer.com/start. That will get you connected with me and the team. We'll get you a pre-approval, go through the numbers. Most importantly, what I always like to tell people, and it's shocking how many people I talk to that have spoken with another lender or been pre-approved, they just have a number. Oh, you're pre-approved for this. And well, they told me I don't want FHA, I want conventional. What we do with that process is we gather all of your information and then we show you all of the loan programs you would qualify for in a side-by-side comparison. With that, you can dial into what is optimal for you. So we get a sales price, a max purchase price, a sales price you're comfortable with, what the total monthly payment is, including taxes, insurance, any HOA dues, all of that, and the total cash to close. So when you go under contract and you find the right home, the mortgage is really a non-event. We front load everything, get you all the certainty, clarity, and guidance that you need to make the best decisions. So if we can be of assistance, use that link below. If you need a real estate referral, if you need a realtor anywhere in the country, Jeb has an amazing network of professional realtors that handle business exactly the way he does, in the same way we do on the mortgage side. We would love to get you connected with someone. So we're going to keep it a little bit short this week. Hopefully you all have excellent 4th of July plans, barbecue, beach, or lake day, get some sun. I am going to get an early start on 4th of July here and get out and get a round of golf in this afternoon. So again, hope you guys all have some awesome plans. If we can help, reach out. If we can just help by showing you this data every week, just tune in every Friday. We'll get back to the normal schedule next week where we go through and let you know everything that happened in the economy and how it impacted mortgage rates and you as a buyer or seller or real estate professional. All right. Happy 4th. Have a great week. We'll see you next Friday.